All right, welcome back, ICA graduates. What I want to do today is review what happened last week, go over a little bit of what's going on in the charts, give you guys an idea of what the volume really looks like. Not going to take too long today. I know I'm doing a little bit later than I originally planned, but still got to get you guys the information here. So let's jump right into it. If you've been following along with what we were talking about on Wednesday, the rally that we were dealing with, right? We had, two potential Elliott waves. And from the Elliott waves, you have an ABC for a correction. And all we were really doing was comparing them. But what I also want to do right now with this is, let's clear this up a little and give you guys a look as to how far we were retracing in terms of each of them, right? Because if we started up here and this was our full move, how far did we retrace? Okay, 0.786, right? So even there, we had this nice big rally. And I just want to point out from the bottom here, if I were to measure to that, what you see here is it's a 13.9% rally, okay? So I'm just going to note that there. 13.9%. Okay, that's from here, 5, the lowest low back to where we rallied to, okay? Because this is a, this is a bear market. Bear market's headed down, all right? We're headed down. But what happens is when you have these shorts that cover, it does create a very violent rally back up, okay? And what we want to do here is we want to look at how those rallies match up to previous movements just like this from the past, right? Because this isn't the first bear market in the history of the stock market, but for a lot of us, this is the first one that we're experiencing, completely in terms of in our abilities to actually be involved with the markets, right? If you had gone through a crash when you were like a teenager or something like that, or when you're in your childhood, you weren't able to really observe these things as much. So now what we do want to see here is the second leg and second move down. We did have a very similar, I was showing this ABC move. If you had, right, ABC, the C isn't the prettiest in terms of the legs don't quite equal each other, but you do have an expanded version, right? When we take a look at what we did recently, it's very similar, okay? So I want you to consider that, when I kept on telling you guys, remember when Apple made, 11 days green in a row? And right now what ended up happening was we were kind of expecting that it could do one more drop before it came back up, right? But it didn't quite do that. It didn't go as far down as we expected. So there was the possibility that this could have happened further, right? But it didn't. It happened right now because people covered earlier this time, not willing to wait as long, all right? But we did smack, look at this. Look where we stopped, right? We stopped at that very bottom bar, but we still have all this volume that we still got to break through to break up above, okay? So there's a lot of people, and I want to point out what's the media right now saying is that, oh, we made a bottom down here, right? We made a bottom down here is what they're saying, so that we're headed further up above that. That's what the media is saying right now, right? We're going to make new all-time highs. This was it. This was the route, all that's going on. But I kind of want to point some things out. Yes, what was the fuel behind all this, you guys, right? First off, we do have to point out that the Fed did raise their rates. Okay, let me go into this one real quick. I know this chart was really ugly from before, but the Fed did raise their rates, okay? That's where this red line is. And then you got 1, 2, 3 really strong days, right? We had that on Wednesday. Three really strong days. We're breaking up to the top part of this channel, which we haven't actually rallied that far and that all the way back up, right? But we do have this shape, okay? And so as we're up here, we're smacking into resistance, 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 right? Where we turn back around, we very likely will come back to retest this area right here, the top part of this channel. So right now, what I'm expecting is we have this range between where we are right now and then where we just broke out of, this like right under 400 to about 410, not 410, 412, 413 range. I'll go a little bit closer in a moment. That's pretty much where I expect us to trade until there's, you know, further push or further decision due to additional earnings or you know, other economic factors that are released throughout the week, right? So if you notice, we're dealing with all this, okay? And there's that huge other side as well. Now, here's the interesting thing to look at. So look at the daily right now. And all I want to do with the daily is we're going to point out here, 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 and then here. What happens, guys, every single time that we have our numbers, you know, in this situation highlighted in green? Okay. If I were to draw and point these out, these are ultimately marking areas. This one doesn't really exactly count because it didn't turn green in terms of the values actually breaking up above, but it still did head back down, right? So usually not the first one, but then, hey, if you have a second one, okay, not the first one, but hey, if you have a second one, so not this first one, because here, hey, we did go a little bit higher. Guys, what do you think is going to happen next, right? These indicators do need to find some form of relief, okay? And I get it. It could continue to fluctuate up if we're really out of the woods now and big money things, so we could head higher, okay? But it still needs to have some selling on the way up. So there are going to be areas in here where if you go onto a smaller time frame, there will be some, you know, some selling in there. What I was also noticing with things such as, you know, let me just take these indicators off. Things like this, you're going higher, higher, higher. You got higher, higher, higher here. And then, yeah, these numbers can't go higher at this point. So, you know, it is starting to show potential divergence. And we also did get a large amount of selling at the end of it. Look at that selling compared to everything else, right? Here, let's zoom out. You didn't get that much selling. Look at that, guys. Hold on. Since this day back here, right? And a close right there. You got up back here too, in the middle. Oh, this was for dividends. Okay, so large selling to close things off last week. Keep that in mind. But very likely that's taking profits near the top. So we could very much gap down a bit, come back up, retest it, falsely break out, and then head back down a little bit more. Okay, that's kind of what I think would, you know, if I were big money, start down here, right? Everybody's, you know, so many people are turning bullish. Start down here, head back up, retest just a little bit higher, right? But remember, on the left, we have all the, you know, that before the drop, we have all those people sitting up above here. So potentially come back down, and from there, you could measure this to have at least it come back down to the golden pocket, which could be around this 405 range. So let me put that on, and let's just do it in here. 30-minute chart. I'm gonna delete a few things. And I was also pointing out too, wrote that here, quick move, low volume daily. When you go into the daily, this little section in here that I have this box in, down from this, you know, right under 400, it actually has very, very low volume compared to everything else. So it very likely could move very, you know, fairly quickly. It could bounce off of it in the retest. So my current thoughts with what would potentially happen is we're going to start off a little bit lower, okay, come back up, retest a little bit higher before we come back down, okay? And you also want to point out and remember, we do have this uptrend that we've been, this white line down here that we've been respecting. So if we do break down below this white line, expect some sort of retest before we decide what to do from there, okay? But as of right now, I expect us to probably break down a little bit because all of those things are so overextended. And at the very least, I would give it a target to probably this 407 area. That actually looks real good. If you want to be safer about it, you could even maybe say this 409, 410. You do have about a $2 move to the downside. But you also want to keep in mind, right, depending if we gap down. It's also possible, let's say, what would happen? So that would be one, if we gap down and we push back up, right? We'll test the gap first. I think we could head a little bit higher and then reject, all right? If that doesn't even happen, if big money's got reason for us to start lower and then just head down, okay? Where are we going to find support in all this? Well, there will be support down here where we broke out through, but the first little area is going to be, you got your 408 right here, 408.07, and you also have this 405, 406 range where you do have a little cluster of people too. So on a smaller time frame, right, this is 30-minute time frame, you could have a little bit of a relief bounce near that, maybe fill that small gap that you have there too, okay? But big, keep in mind, we always want to keep this big picture look here, and this white line is essential. And I do want to also point out, we are getting very, very close to the boundary here of this wedge that we have, okay? So if you really wanted to include all the wicks as well, we do have a little bit more room to go, okay? Right, it could actually test a little bit the tops of this 417 if you just wanted to respect that wedge, right? But if it's this rising wedge, how does rising wedge usually break down? It usually does hit that top part, right? And then as it comes back to break down through here, we do have, right, breakdown and potential headed further down from there. So just keep that in mind. We've got on this bigger picture, yes, this looks like a bottom shape where we're headed back up. It's the W shape, double or triple bottom, depending on what size picture you're looking at. But I want to warn you guys, how, aside from these huge companies, right, our behemoth companies, the giant mega caps, how are most companies doing, right? Yeah, we got some good news from Tesla. Tesla popped like crazy. We're hitting into resistance as well. I had this, I didn't, all the stocks that I had charted, I had said have a potential wave 5 that they could head up. How far up, I didn't necessarily chart it as high as they did go. They all beat earnings more than I did expect. But like, for example, Amazon, Apple, Tesla, these ones popped. But how about the other ones like Snapchat, right? I don't know if Peloton did, but also, okay, so up here, right, Amazon popped as well. Amazon actually, broke through these resistances, so they don't even have to deal with those people right now. There's a very small, just giant volume gap as well. So if it does break down from being rejected from these values up here, it could head back down, right? Earnings was, right, their surprise was still pretty terrible. But at the end of the day, it's the price is going to react. People are going to react to it the way that they want to. So, and right, if I took these other shapes from before and I copied them over, you can kind of see how it still could play out to the downside. So just be careful. It's taking that pop up to trap in additional investors, and then potentially could revert from there. So these were the two, right? Do you see that? This is from up here, this shape, okay? Kind of dragged it out to make it fit, but you see how it pops up before heads down. That's this guy. This guy being a little skinnier, right? He is the same thing. Came down here, popped a little bit higher before headed down. So just be careful about that, guys. You know, where would I necessarily start to look more bullish on all of these stocks? You got to look for this here. You still have this to break. Okay, there's this slope. When you start to meet this slope and break up above it, that's the signal that, hey, we're more so in the clear, right? But if you want to call this a part of Wyckoff, well, you had your distribution. If this is accumulation, all of these, you know, the candles and the volume down here really need to support that. I could say, you know, Amazon, yeah, this volume relatively is pretty high, but there's a lot of selling volume. And like Composite Man wise as well, I think they could probably push it further than that. Okay, so I think they could get it down to this volume down here. This up here, there's still a lot of room to move down. So just be careful and remember how in the alpha trends chart that I was showing you guys, you usually have this W shape where you actually go a little bit higher before you have a breakdown further. So, you know, there are a lot of media sources now calling for this is the bottom, this is the bottom. So I just want to throw that as a sign of caution that the more that the media is saying that, the less I would necessarily believe them. Okay. But again, be careful with your own risk, the way that you guys are approaching these things. If there are additional charts and additional things you guys want me to throw charts into, just throw them back into, you know, let me know in ICA, and I'm more than happy to throw those charts up for you. But yeah, we'll see how this week goes. I'm expecting a little bit of a sell-off to start the week off, and then we will see from there. Let me real quick go over what our economic calendar says. So our calendar for the upcoming week. Okay. Our economic calendar for the upcoming week, we've got some manufacturing. We've got, I think we have, let's see, PMI on Monday, US manufacturing, producer manufacturing index. We've got job openings, so we got some employment numbers on Tuesday. We got some, the Fed President James Bullard speaks on Tuesday at night. Homeowner vacancy rate, final PMI, factory orders. Okay, so more, you know, jobless claims, unemployment rate, consumer credit report. So through this week, we've got some pretty important numbers coming out, and we'll see, you know, if consumer credit shows that the consumer is struggling, or PMI shows that our producers are having to eat up larger costs. You know, those things could trickle down into additional fear, right? You know, right now we are starting to get less fearful. Keep that in mind. Overall, the fear numbers did go as low as, let me pull this one up. The fear numbers when we came down to here was the 7, down here was a 17. Right now where we're around a 37. Okay, so people are starting to become a little bit more confident in the markets, and we did have a pretty decent rally from here. Okay, we have rallied another 13% or so, but that, again, that doesn't even mean we're out of the woods. We haven't even hit the 200 day moving average right now. We're still at the 100. So, you know, these things they do start to curl, but they can still reject. All right, there is room for us to play to the upside, but I would say that's a smaller range right now due to how overextended we are. Look for some relief before, if you do want to play to the upside, before you necessarily do that for something like SPY. Okay. And but yeah, don't trade against the trend. Make sure that you're careful with your stop losses and your risk assessment. If you do have additional questions, message me. We're more than happy to help out. But yeah, let's get some conversation going on in the ICA graduates, and continue to work on your trading. Okay. All right. See you guys tomorrow. And yeah, let's keep up the trading. Talk to you guys then. See ya.